Yeah, great to be here with everyone. Thanks to Octant for hosting us. So yeah, we wanted to share more about Spark today. I'm gonna share more about like the markets, about like Spark, and Niko is gonna dive deeper into the product mechanism and the technical architecture as well. So Spark, why do we exist, right? So Spark as a whole, we solve the problem of liquidity fragmentation, or you can say like on-chain capital markets fragmentation. So let's dive deeper into that. So I would like to, introduce like Spark. Actually, we are made up of three main stack: savings, Spark liquidity layer, and SparkLend. So basically for Spark, we operate as the largest and first star of Sky, or you can be think of us like a sub-DAO. So we currently deploy more than $3 billion of Sky's balance sheet across all the different DeFi opportunities. And over here, you can see that, Spark, we actually borrow a lot of capital from Sky and deploy this capital across these like DeFi, CeFi, or even like some risk adjusted opportunities as well, just to generate like a higher yield there. Right. So this is mainly done by the Spark liquidity layer. So this is basically a smart contract system that programmatically like deposits into and also withdraw from different opportunities. So we kind of target like different hurdle rates set by the team. Yeah, and then we also own like a SparkLend market, which is currently the second largest single instance money market on Ethereum and hold more than like $8 billion in CBL. And last but not least, Spark Savings as well. This is the top of funnel for both retail and institutions. And also like our top priority to get like deposits into savings so that Spark can deploy more capital across the DeFi space. Yep. So what is really savings? So right now for Spark Savings, it's actually a vanilla product of like Earn product. So we currently like launch it across multiple chains like Ethereum, Base, Arbitrum, etc. And one thing it's really like very interesting here for Spark Savings is that it's not exposed to like risky collaterals such as like perps or even like risky assets looping. So in addition to that, Spark Savings in V2, we also expand further to USDT and ETH as well. And yeah, this is one of our key products here. And of course, we are also offering like some rewards as well for Spark Savings. Niko is going to go further on that later on. And then we have like Spark Liquidity Layer as well. Currently, it's the second largest on-chain capital allocator. And right now, we deploy capital across like different venues, such as like different markets in DeFi side, which I'm gonna dive in deeper later on as well. And interestingly, Spark Liquidity Layer is also the cash cow for Spark, and it's currently earning over like $200 million in annualized gross revenue. And we kind of project that revenue annually to be around like 20 to 80 million, depends on the like markets conditions. And currently, just to shed more light in terms of the mechanism as well, is that we will route these funds to various like blue chip DeFi protocols, mainly the lending markets. And of course, like Spark will earn like a spread here between the asset yields and also the Sky base rate. And then the rest of it, we will kind of pass it to the savings users. And then one of the key value here is that we are able to stabilize the stablecoin rates across different money lending markets. So that is kind of like Spark's superpower. Whenever we launch on like a new chain or whenever we go into like a new lending market, we can basically kingmake the chain or kingmake the DeFi protocol as a whole. Yep. So we kind of help to maintain the rate stability, not just within the SparkLend market itself, but across the lending market that we are integrated with, so that we kind of create like a more predictable and efficient environment for both the borrowers and the lenders. Yeah. And then I just want to share some case study here as well. So basically, we work very closely with Morpho and also Coinbase as well. So this is the model whereby, Spark deploy like more than 80% of our USDC liquidity into the Morpho Coinbase market. It essentially allows the Coinbase users to be able to use like their CBBTC and borrow out like stablecoin. So this is like a very important user acquisition channel for us, because it's not just limited to whales or institutions users, but in fact there are a lot of retail users, interestingly, who use this as well, to borrow out the stable coin and to pay off their mortgage loans in the real world. Yeah, so this is a very interesting case study here. And then of course next we have like Maple as well. So Maple is a very important market to us as a whole because we kind of leverage on Maple to unlock private credit channel of distribution. These allow Spark to bridge out to off-chain lending. We are able to directly tap onto the corporates or institutions who put their BDCs into their balance sheet, and we kind of expand the reach of these potential borrowers. And it's not just limited to like crypto native institutions as a whole. So currently, we did that through like Maple, and we deploy over like more than 630 million of dollars allocated in Maple market. Yep. And then the next one would be SparkLend, which is our loveliest lending market. So currently, it's the second largest single instance money market on Ethereum, as mentioned, and also the top three lending market by TVL. So we really focus a lot on onboarding blue chip collaterals. The only looping strategies acceptable on SparkLend at the moment is really like ETH looping. We don't really onboard like any high risk assets for looping at the moment because we are really very focused on having that kind of institutional grade experience for our loyal institutionals or whales borrowers to borrow on stablecoin as a whole. So right now, it's a very basic lending market model. Spark earns around 5 to 30% of interest there on externally funded loans. And it's also kind of lower cost base to us because we are able to just directly borrow the stable coin from Sky. Yeah. And then next we have like Ethereum Foundation DeFi strategies. So yeah, so this is also one of the main reason why Ethereum Foundation choose like SparkLend as one of their selected strategies because of our very conservative blue chip collateral portfolio of like SparkLend. So these kind of make it the safest lending protocol in the space and also trusted by Ethereum Foundation as a whole. Yeah. We will go to Spark Savings. So right now, just to build on like the testimonies as well, is that Spark Savings are already integrated across some of the blue chip wallets arm, as well as some of the institutions custody like Kobo and the wallets, OKX wallet, Binance wallet, Xeron wallets, etc. So the experience is kind of seamless. So if there is any DeFi protocols who would like to build more about this, then you should definitely hear more about what Niko is going to share next. Yeah, I'll pass it over to Niko.
Yeah, thank you, Sarah. So yeah, I will try to dive a little bit deeper into Spark Savings Vaults V2. So this is a new version of the Savings Vaults that we launched recently in the past month. And the goal of the Spark Savings in general is basically to offer users the best risk-adjusted rate or yield at scale. And this means offering a reliable and sustainable and safe yield in the size of hundreds of millions to billions. So we're really targeting a large size and ensuring that there is ample liquidity for users to enter and exit these markets seamlessly. So with the old version of the vault, the Savings V1, it was basically an ERC 4626 vault that just enabled users to deposit USDC into the Sky savings rate. And the Sky is this DAO that sits on top of the sub DAO that is Spark. But the thing here is that the rates for the Sky savings rate is set by Sky. So in Savings V2, Spark is doing it a little bit differently. So here, the vault deposits are deployed into the Spark liquidity layer, which Sarah just talked about before, which can deploy the liquidity into various yield-bearing strategies. So that can be DeFi lending protocols, it can be deployed into real-world assets, and so forth. And this is already the mechanism that Spark uses to deploy funds that it borrows directly from Sky into these strategies to earn a yield for Sky. And it's actually one of the main drivers that is already funding the Sky savings rate. So with Savings V2, basically now anyone can provide liquidity into the Spark liquidity layer and earn yield. So this also means that Spark can support whichever savings assets that they want. So as part of that, we're launching an ETH vault, or have launched an ETH vault. And also the rates are controlled by Spark governance, and the allocation of the assets are controlled by Spark governance. But these vaults still leverage the Sky savings rate as a baseline rate. So you will not earn less than the Sky savings rate, but there's the flexibility to allocate assets to other strategies where you might be able to earn a higher rate. But to begin with, for example, for the new USDC vault, it is predominantly being allocated into the Sky savings rate. In addition to this, you also earn Spark points on your deposits. So in terms of how this works under the hood, basically, if you look at the left side, the user will deposit assets into this Spark Savings Vault V2. And if you go to the next slide, Sarah, these vault deposits can then be deployed into the Spark liquidity layer that we see here on the right. So the Spark liquidity layer is really both on-chain smart contracts and some off-chain components. So the ALM proxy is the smart contract that holds the deposited assets. And then you have something called the ALM controller plus rate limits. So this dictates where the assets can actually be deployed. So it's not like Spark can just allocate your assets anywhere. It's only into pre-approved protocols or trading venues, and only up to certain exposures that are dictated in these rate limits. So there's like certain limits for how much can be deployed into Morpho and Maple, Superstate, etc. And then at the bottom of this, Spark liquidity layer box, we have something called the ALM planner. So this is some backend software that will monitor all the integrated markets and basically look at the rates, look at the liquidity, and through an algorithm decide, okay, how can we best allocate the deposited assets to give you this risk-adjusted rate, and a attractive risk-adjusted rate. And again, it's really Spark governance that controls what are the limits of this system, what are the accepted exposure levels and risk levels in the system. And if you go to the next slide. So another key part here is the liquidity in the vault. So we always want to ensure that if you want to exit the vault, that there's ample liquidity there. So right now the system targets that there's always 10% of the deposits are just sitting there in readily available liquidity. And if that liquidity starts to decrease, users are withdrawing from the vault, then the Spark liquidity layer will automatically start unwinding from these positions on the right side. And obviously, the system is also designed such that the positions that are being invested in can be unwinded fast. So there should always be ample liquidity to exit the vaults. And the last part here is it's also the Spark liquidity layer that controls the rate of these vaults. So based on the yield that the Spark liquidity layer can earn from deploying the funds into all these different strategies, it will also set a rate, and it's a continuous rate, so it accrues every second. So if you go to the next slide. Yes, and you can just go to the next slide again. So all of this is being tracked in real time, so you can always see exactly how the different vaults are allocating the underlying assets. So there's complete transparency. This is an example of the new SP USDC vault. And there's basically a real-time breakdown of what is bear hacking the assets in this vault. And yeah. So in terms of integrating these vaults, I mean they are ERC 4626 compliant and also ERC 20 compliant, so they are just tokens, and they're pretty easy to integrate because you have the standard deposit and with withdrawal functions that you have in ERC 4626, and we think this is a really great way for any product or protocol out there that has a lot of dormant stable coins like USDC or USDT or ETH that's just sitting there. Then can be wallets or exchanges or just DeFi protocols that where users deposits these assets. You can integrate these savings vaults to earn extra yield and still have very strong liquidity guarantees on these assets. And as I said before, it's an accumulating token, so you don't have to worry about any like rebasing accounting. And yeah, right now we just recently launched these vaults, so they are deployed on Ethereum, but very soon we will support other networks and L2s. And if you're interested in integrating these vaults, then yeah, we have some technical docs on our documentation page. And yeah, then the last thing I want to talk about is SPK. So if you go to the next slide, recently Spark also launched its governance system. So it is the Spark holders that are controlling, for example, the Spark liquidity layer and the savings vaults. So yeah, if you hold SPK, you can participate in the governance either by voting directly on proposals or by delegating your tokens. You can also stake SPK, and while you're staking, you can still participate in governance, but you're also helping secure Spark infrastructure. So we're planning to use this stake to secure token bridges in the future. And then lastly, if you stake your SPK, you'll also earn Spark points. So I think that was it from my side.
Yep, thank you so much, Niko. So yeah, I think these are our presentation. Is there any questions from anyone?
Awesome. Thank you so much, Sarah and Niko. Appreciate the presentation. Super excited to see Spark Savings V2 and really looking forward to our hackers implementing it into the Octant vaults and figuring out ways to creative ways to use these. Yeah, so for everyone who's watching, and if you have any questions, please feel free to drop them here on the X broadcast chat. We still have some more minutes with Sarah and Niko to answer any questions that you may have, and they will also be available later on to answer any async questions. I know sometimes it gets more complicated when you start to build, but for what you told me, they are actually quite straightforward to implement, right? Like they are they're built on these standards that are highly compatible with Octant vaults as well. So maybe we can start. You can tell us a little bit more about that. Like, how easy do you think it is to integrate, and maybe also if you can talk a little bit on some creative or ideas that you can expect from the builders.
Yeah, so as I said, the savings vaults are basically just ERC 4626 vaults. So if you're already supporting that in one way or another, then these Spark savings vaults should fit right into that. So that should mean that if you are supporting USDC or USDT or ETH, then you should be able to easily just integrate the deposit and withdrawal functions of these new Spark savings vaults to earn that extra yield. And this is something that we're seeing a lot in wallets and centralized exchanges, or just in general in products where you have a smart contract that's holding a lot of USDC, for example. It could be a token, bridge, for example. I know some people think that might be controversial, but if you do have a smart contract that is holding large amounts of USDC, then you could integrate the Spark Savings Vault and earn yield on that USDC that is just sitting there, for example. And you can route that to your users. You can create some kind of revenue share. That's really up to the integrators. But I think what's important for Spark is to say that we really value like a safe yield. So this is really, we're not going to offer the highest APYs in the space, but we are going to offer, or at least try to offer, what we call the best risk-adjusted rate. So again, a safe and reliable and sustainable yield for sizes, in the hundreds of millions. So it should be a vault where you feel like you can safely deposit assets and always know that they are invested in a conservative way and that you can always exit. So this is something that we've always focused a lot on with also the previous savings V1 vault, is that there's always been a lot of liquidity to move out of these vaults. Again, right now we're targeting 10% in instant liquidity, but for example, for the SPUSDC vault, it's actually only right now allocating into the Sky savings rate, which also has instant liquidity. So it's actually like right now for the SPUSDC vault, there's no liquidity constraints. Basically, you can move in and out. That might change in the future, but the goal is to have a vault where users can always enter and exit at large sizes. That's the sort of market that we're trying to focus on.
Yeah, I'd love to hear that, especially because that's also the vision of Octant, to have these different ecosystems use the vaults to channel the yield that they generate into their ecosystems in whatever they want to grow their ecosystems. And that goes exactly hand in hand with what you're saying about risk and trying to have yield that is not too risky, let's say, or when we're talking about large treasuries, then you don't want to have all that money in something that can be too volatile. So love to be aligned here. Just to remind everyone, you can drop the questions here in the X broadcast chat. We also have a Telegram group chat for the people joining the hackathon. So let me share the link here as well in a second. Do you, Sarah or Niko, would you like to touch a little bit on maybe some ideas for hackers, like how you would like to see the vaults implemented?
Yeah, I think I can probably take this. I think the vaults can be, implemented quite creatively. So we do spoke to some, institutions. They prefer sometimes to get a higher yield compared to a baseline yield of right now 4.5% APY. So what they will do is that they will kind of build out a perp strategies, like a perpetual strategies, and then use SPUSDC or SPUSDT as the collateral there to guarantee the baseline 4.5% on APY. So whatever perpetual strategies that they ultimately do, to perform the trading leverage, they could just add it on top of that 4.5% APY. So that would sort of give them a total net APY of 7 to 8%. So it's kind of an interesting strategy there that certain institutions or funds they are working along with this. But of course, there are also other strategies as well in the lending market, whereby you will use SPUSDC as the collateral to borrow out different type of stablecoin or other stablecoin, just to do looping with this SPUSDC. essentially is to like increase the yield and leverage on this like stablecoin as well. Yeah, so this could be some example to explore.
Love that. Thank you, Sarah. What about you, Niko? Do you have some ideas as well to share?
Yeah, I mean, I think I would echo what Sarah says, which is you can basically see these savings vaults as a way to anchor a certain base level rate, and then you can implement, interesting ways to offer a higher yield on top of that. So we're calling this new rate that Spark sets for the Spark Universal Savings Rate. So yeah, ideally we see that as a base rate, and then the strategies that you build on top. I mean, because these are just tokens that increase in value over time, you can really use them as collateral or integrate them in protocols in any way you want. And the nice thing is that they are liquid, so you can always exit to the underlying, or at least have very strong guarantees that you can exit to the underlying. So yeah, I would say rate anchoring and then offering sort of yield on top is a good way to use this.
Nice, love that. And just before we wrap up, maybe can you share one more time the links to the documentation? I'm gonna share it in the chat here, but also to remind everyone, we have a Telegram group chat for those participating in the hackathon. So thank you, Niko, for sharing this. I'm gonna put it on screen right now. Spark Docs.
Yeah, so I mean, you can just go to the docs.spark.fi. If you are a developer, there's a more specific developer section here. So this is more the nitty-gritty of how the smart contract works. We also have more sort of high-level user guides. So if you're more interested in just learning about like how can I use this just for my own use, there are some user guides on this portal as well that explains how you can deposit into these savings vaults.
Amazing. Thank you so much. All right, we still have 2 more minutes before we bring Murder Teeth from Yearn here. So if you want to use these 2 minutes for some closing remarks on your workshop, you're welcome to do so. Really appreciate you for coming on and sharing this alpha with our hackers.
Yeah, thank you so much for hosting us, like Niko. It's really great to be here. And yeah, if the audiences have any questions regarding Spark Savings Vaults, feel free to get in touch with us. We are more than happy to help out with the DeFi integration questions that you have. Yeah. Happy
What is
building.
the best way to reach out to you for the hackers?
Yeah, they can reach out to me via like Telegram or like my email. Yes.
Cool. Yeah, if you can share it in the chat, I'm gonna show it on screen as well while we wrap
Sure.
up. But yeah, really appreciate you, Niko and Sarah, for presenting Spark at the DeFi Devs Day. Thank you so much, and see you next time.
Thank you.
Thank you.